All right, everybody. So for our next guest, we have Scott Janot on, who is been with FFL for a year and is an infinite banking specialist. He can help you run illustrations. He can help you be prepared to do infinite banking. And I was like, dude, I don't even know what the heck infinite banking is. So to start, Scott, thank you for getting on. Can you
Thank you.
can you give me a 2-minute overview on infinite banking?
Sure. Well, I'll start by saying thank you to you and FFL USA and Sean, Mike, and Sean Rogier and everybody in FFL and AMS. Um, I'll start by saying kind of what infinite banking is not and why I was brought on. Infinite banking is not an index UL or UL or VUL policy um, for many different reasons, but infinite banking is being utilized by putting together a program uh, through dividend paying whole life insurance policies, but they got to be designed properly by someone like myself or a specialist. It's not just your
You just
typical,
don't do an illustration.
yeah, you do the illustration, but it has to be specially designed properly by someone that knows how to do it, not like your traditional whole life, like Dave Ramsey or Susie Orman talk about, like you're paying maximum amount of money. Um, we can design them very, very differently than how you can, let's just say, an index UL policy. Because typically when you're designing some of those policies, and there's nothing wrong with either of them, they're just two different types of products. One is meant for banking, right? And the
Like
other one is
banking,
meant
like
for,
go to the bank and pull money out type of banking?
that's correct. You can literally design a policy like I just did last night for a real estate developer that wants to put in $100,000 every year, and have the minimum annual premiums of $12,000 a year. But every single year after that, they have the ability of putting in $12,000 minimum as a floor and $100,000 every single year to load up and still be designed as a non-MEC or modified endowment contract. So, as an example, you can literally get someone that does real estate, that wants to invest in real estate, that let's say doesn't want to use their cash sitting in Bank of America savings account, and they want to go buy a $400,000 property to rent or Airbnb or whatever. And typically you spend 20%, you got to put down 20% down at Bank of America, let's say, for an investment property, or you don't want to pay PMI insurance. Well, instead of using your cash and then it's gone and you got to replenish it now, which is going to take you, I don't know, 5, 6, 10 years to replenish 80 grand. You can literally take the 100,000 from your LLC, general account, your personal account, whatever it is, and put it right into this specially designed policy that I know how to design. Make your minimum premiums $12,000 a year, 1,000 a month, and still have access to borrow the money within a few weeks of putting the 100 in,
At
up to
what
75-80% tax free, to go give it to Wells Fargo now and earn dividends on the full 80,000 as if you never borrowed a single penny.
Okay,
So
so we
you're
have
earning money while you're borrowing.
so you're basically earning more money than the interest you're borrowing at. Is that a fair statement?
See, that's correct. Because the difference, Andrew, is now when we're talking about infinite banking using whole life, especially designed whole life, you are receiving dividends from a mutually owned insurance company that's been around over 100+ years and has never once missed a dividend payment. And we're not talking about stock companies that have to answer to shareholders for profit. So while you and I or other people may have ups and downs in a 401k, IRA, index,
They don't.
who yeah, they still get the profits, the board members, the CEOs. So if people don't understand what a dividend is through a mutual company, you're not getting a percentage based upon a return or rate of return. Like there's no investing in this program. You're getting a percentage in the form of a dividend based upon the performance of the actual mutual insurance company. How do they take our premiums? And at the end of the year, what do they earn? And now we, as owners,
What did they earn
participate in that profit share.
minus death claims, right?
Say again.
What they earned minus death claims.
What do you mean? When they earn? You mean as far as the dividends?
Yeah.
Or
What they
yeah,
earned minus expenses and claims they paid and all of that, right?
yes, yes. So they take the money, they take our premiums, and then they look at what was the mortality costs, actuaries. They see how much it costs for admins and advertising. And then at the end of the year, they'll come down to see what was the profit share. And then as business owners, right? Because we're a business owner now of a mutual company, when you pay into this mutual company, now you participate in the profit shares in the form of a dividend. And that's where you're now earning every single year a dividend, because they've never stopped earning it for 120 years since Lafayette Life's been in existence.
All right, so
So
number one, the company we're using 99% of the time is Lafayette Life.
correct.
If you're with FFL, how do they contract with Lafayette Life? Like, do
Okay.
they just reach
There's a
out to their upline, their manager? What do they do?
there's a couple different ways of doing it. They can reach out to their upline, right, their admin, or they can also reach out to the AMS, the Advanced Market Team, maybe contracting at fflams.com. That's one way they can do it.
Okay.
Now, Lafayette Life is, from what I understand, they're not going to just give anyone a writing number. Like, we have 20,000 agents plus, right? We're probably on
So
30,000 by now.
you
They're
have
not
to
just going to
submit
give everybody.
your first piece of business to get a writing number?
That's correct. So that's the first thing. But what I've been able to do for the last year to help facilitate that a little bit for the agents is, instead of the agents that may or may not know how to explain this or even open Pandora's box to try to answer questions that they don't have the answers to, they can leverage me, and I can just do the presentation. If they just come on my Zoom, I got a calendar link where they can just log in my calendar. It shows them a Zoom. They pick a time and they can get the client on my Zoom where I do the presentation. I share my screen and they just sit there, watch, and
And
the
you're a
split that
licensed
I
agent.
run.
You're a licensed agent, and you'll actually help them close the deal.
That's correct. I was brought in. I've talked to Sean Ruggiero for many years, and he asked me last year if I knew more about infinite banking and how this works, because social media like TikTok, YouTube has it wrong. They're trying to portray the IULs as a infinite banking, and you can't do that, because in year one, if you apply premium
You
and
can't
you
take
have
it
a
all
net
out.
cash area zero, you can't get cash. So I was kind of brought in to isolate that and kind of
Uh,
change the narrative and explain the difference between those two. But yes, to answer your question is, I'm able to become now a mentor. That was what I worked on with AMS. That I want to be like a, maybe like a vendor or something, like where I want to educate, I want to train. That's the
yeah,
background I come from, is like
and
an
just to be
executive advisor.
transparent with everybody, you're in the hierarchy to receive a small override. You don't take any commission from the agent, but
No, no, I do. No, that's different.
oh, you do.
That's not what I have. What I have right now is, like, I'm not a W-2 employee. What I have right now is I will train, educate, and mentor the agents that want me to help them, whether it's one-on-one or as a team, like agencies. Like, I've worked with a couple different agencies that are using me, for guest speaking, kind of like what we're doing today, maybe, or when they have their nightly meetings to go over their numbers, I'll pop on if they want me to answer questions. I make myself accessible,
Now, do you
basically.
take a
So
percentage if you close a deal for an agent? Do you
yes,
take okay, what do you take?
yeah. So my deal is minimum 25%. They get 75% to sit there, watch, take notes, basically get paid to just watch me, watch me work. Um, and basically from there and that point on, I'm able to put their name on the application with me, as long as their paperwork, their contracting paperwork, is in-house at AMS.
Okay.
So as long as we have the paperwork filled out correctly with, you'll need a copy of your errors and omissions, anti-money laundering, you'll need a voided check. And if you have all those documents ready and prepared with the application filled out, I can put your name on the application as pending. And now it shows Lafayette Life that you actually have a piece of business with a writing agent.
Got it.
And now we need to expedite that process, because we can't hold you or your client up. So we need to get this done quick. The issue that we may have, that we run into sometimes, is all the uplines. have to have it as well, Andrew.
Yeah,
So,
well, if they don't have it, they get missed. So get
well,
your get
I
your
don't want to. I
get
don't
your
want to do that.
contracting in. Get your contracting in,
Yeah,
or you get
yeah.
missed. That's the way I like to do things. And don't
I
call and
understand.
complain
Yeah.
because we just told everybody. All right, so
Okay.
um, if because this can like be confusing. Because if I'm a brand new
Okay.
agent, I'm thinking, what the heck are you talking about?
Yep. So let me
So
simplify it.
no, I just want to do this. What do they ask? What should I ask if I have an appointment to identify a potential infinite banking customer?
Okay. What I have the agents ask right now is a couple different questions. One, do you own your house or do you rent the house? And if they rent a house, you can't really help them. If they own a house, I typically ask, how much are you putting towards the mortgage? I want to know the mortgage, the amount of mortgage, the interest rate, and then how much extra are you putting towards the minimum, right? The minimum mortgage payment. Are you making an extra 100, 200? And then I tell them, you may want to stop doing that. I'll show you a better way where you can put that money and leverage it for more, you know, pay off your. I can show you how to pay off your house in 15 years instead of 30 by showing you certain things. Then I ask them, do you have any credit card debts where maybe you have 10, 15, $20,000, but are you paying the minimums that they require, like $123, or are you paying 200, 300? So I'm trying to isolate. Well, I'm trying to effectively get the inefficiencies of overpayments. I want to
Mm-hmm.
see where are they putting their money, right? And I want to use the inefficiencies to build a premium. So I'll gather that information. A car, do you
All right,
purchase a car or do you lease it? So a lot of mortgage protection clients are probably going to be the majority of your
okay.
clientele
So
for
I
this.
sell a mortgage protection client. I ask them if I know they own a home
Mm-hmm.
because it's a mortgage protection lead. Uh, and then what else? Like with annuities, it was always, what do you have that acts like life insurance, like stocks, bonds, CDs, 401ks?
Yeah.
And then that would help me identify what they had to potentially go back and write them an annuity. And I'm trying to find what that is for infinite banking that's not confusing.
Yeah. Well, minimum 250 a month, let's just say, is something that I would start with someone, whether they're 20 years old or I don't know, 55, let's just say, and any extra money they have that's just sitting in a bank doing absolutely nothing. This is like a supercharged savings account emergency fund. That's what we're building. It's also an opportunity fund because when opportunity comes up, you have money to go buy. So if they have a car, if they have a credit cards that they're still paying, but they're making overpayments, like what I was doing is I was making, $1,800 a month of payments when my minimums were like 1,400. So I was giving an extra $400 a month, where now I can use that towards my premium. And any money that's sitting in my savings account, 10, 15, 20, 30,000, I can put that money that was set aside for emergencies right inside of my policy.
And then
And
I
as
can
soon as
take it
I
right
did,
back out.
take it right back out. So now what I
Like, can I
did,
get a debit card for this thing?
no, it's not a brick and mortar where you can walk in. I wish it was, but loans take about 7 days, 7 business days to come back to you, which is perfectly okay with me if I know what I'm going to pay. But since I was the guinea pig for Family First to try it out and test the waters, my premiums that I set up was $6,000 twice a year, semi-annually, so 12,000 a year. So what I did is I gave them $6,000, and I also gave them 20,000 from a savings account. So 26,000 immediately when I gave Lafayette Life that money, I was able to borrow 22,000 out tax free. And I took the 22,000
At what
out and I
interest rate, though? What interest rate are they?
5%.
And then
It
what are
was
you
fixed at
making on your
5%.
dividend?
Well, the dividend currently was at 5.2% and growing. But the dividend isn't as important as is my money earning on my money every single year without being touched.
Even the
So
money you
as
took out, you're still getting that dividend on?
yes,
What if the
because what
dividend has
these
the dividend gone under 5%?
not that I know of. 120 years. I haven't seen that. Nope. And because the dividends are reflected based upon the interest rate environment, and because the interest rate environment keeps going up, the dividends are going to be a lot
So
better than
you're
what you see
telling
in the
me I could
illustration.
I could buy an infinite banking policy for 300, put 300 grand in there, take 300 grand out and buy a house.
Not that much.
Okay.
So
200.
because of the
I could take 200 out and buy a house.
yeah, but the minimum premiums on that, because you got to stay underneath the MEC guidelines, right? The 7-pay MEC test. The minimum for someone that wants to put in, let's say, $300,000, you'll have to pay a minimum that I can design of $36,000 a year minimum that you have to put in. That
How much
gives you
life
the
insurance comes with this thing? Like,
we're not, when you're designing infinite banking, we're not designing it for death benefit. We want the lowest amount of death benefit
the
possible.
lowest
We
premium.
want to overfund it as much as we can. See the difference, and I'll explain how we structure this. Using whole life for infinite banking through Lafayette, because you can't do this with all carriers. The way we design it is a portion of your premium goes towards, let's say, the base policy or the cost of insurance. So if I'm paying $500 a month and 250 of that goes towards the actual cost of insurance, the extra money goes towards what we call paid up additions, or PUA. Now that goes, let's just say, right to the cash value account. Now, in order to be able to put more money into this policy to utilize it as a banking function, you need more death benefit. Because according to the
yeah, I got
test,
it. Yeah,
you can't,
this is
can't
like
have
an
your
anti-money
cash.
laundering deal, right? You can't just dump unlimited
Correct.
amount of money into these policies.
Correct. But now, in order for your cash to be underneath the MEC test, you need more death benefit. We are able to design a policy that can put a term right inside of it. So Lafayette Life allows us to apply a 7, 10, 15, 20, or a 30-year term right inside of a policy. So now I got a term policy in the form of a rider. Let's say $1 million for
I got it.
$200
Yeah.
a month.
So you add a term on. All right. Since we're short on time, I want to get to some other things. Let's say I don't want to give you 25% of my commission. I want to keep 100%.
That's perfectly understandable, and I understand that. If they want to do that, they can go ahead and go to Ask the Specialist. I'll design all the policies for them.
Okay.
No
So
problem.
you're on the back end of Ask a Specialist, and you'll design the
Correct.
illustration, send it to them, and help them. But you're not going to get on Zoom with their client and sell it for them.
Yeah, they don't need me to do that if that's not what they want. I mean, I'll still do a calendar. I'll still call them. I still call them anyway. If I see something on Ask the Specialist, you can ask the majority of everyone. I give them my information. They can still schedule with that
Now,
regardless.
do you want to give your information out on here, or are you worried you'll get blown up?
Every time I do a webinar with Sean once a month or two, my stuff's on there. So whether it's 200, 300, or 600 people that's going to see this or that pop on a webinar, yeah, it's Scott at FFLAMS.com, or they can go to my Calendly if they want to. Calendly.com/Scott Janot, if that's what they want. And I'll be happy to help anyone.
SCOTTGENAD.
Correct.
Okay.
Right.
All right, dude. Well, for everyone on here, I don't want this to confuse people. I don't want people to think they have to know all this right away, but I want them to know that this is where we're going, where an agent can help people in as many different ways as possible if the product fits. So this is just another tool we're going to be looking into and using. And I have a friend that just closed one of these, and he was like, "Oh my God, Matt Goodrich, did you run the illustration for him?"
I probably did.
He just closed it. He called me
Matt.
like, "You got to be kidding me." He's like, "I can't
He's a great
believe
guy.
what just happened." So with that being said, thank you for sharing. We got to move on to our next guest, but appreciate you, man.
I appreciate you. Thank you.
See you guys.